So this is a bit different for me in that not only do I get to sort of introduce other smart people for a moment, I get to pretend that maybe I'm one of them. And so really, really excited to introduce Mark Gould, the Chief Payments Officer at the Federal Reserve Financial Services. Did I get that all right? All right. Thank you. Mark, really amazing to have you here. Really excited to, number one, I would argue continue the conversation from last year, but more importantly, I think, talk to folks, I think, about what FedNow is, not what you're just trying to do, but more importantly, what you've accomplished in a year. And I think last year we were all kind of like thinking about, holy crap, excuse me, everybody, how did we get to where we are so quickly? And now giving yourself another year, talk about where we are and what we're trying to accomplish.
Yeah, so maybe just a quick word of introduction about Federal Reserve Financial Services. So everybody knows a little something about the Federal Reserve. You think about monetary policy or interest rates, or most people can probably name the Fed chair, or you might think in this audience about supervision and regulation. My area of responsibility is in our payments business, and so we operate several different types of payment services, from clearing checks to being one of the 2 ACH operators in the US, doing wire transfers, FedWire securities, and now our new product that you referenced called FedNow, which is a way of instantly transferring money between financial institutions in the United States. And yes, we launched it last year in July, on time, I might add.
Early, if I recall.
And
do you want to talk about how I was a skeptic at first?
Well, I wasn't going to bring it up, but yes, Phil was, first time we met, we had a nice conversation about Phil's skepticism of us launching on time. But thankfully we were able to get across the finish line on time. I think last year we were sitting here and we were around 200 financial institutions connected. Today I just checked the number earlier this morning, and we're at 1,081 financial institutions connected to the FedNow network. And so we're
a round of applause for that.
So now, the Federal Reserve and FedNow combined with TCH and their RTP application, which has been out for several years, there's really strong momentum in the industry for instant payments. And for that, I really credit a lot of people. One is the early adopters within financial institutions in this country. There are over 9,000 financial institutions, and a number of them were really eager to be in that first wave. I also credit a lot of the core providers and the tech providers that serve that market. But importantly for this audience, I think the fintech, and this is what we talked a little bit about last year, there's really great excitement about instant payments among the fintech community. And I've viewed and I've seen the fintech community be a key enabler for adoption of instant payments and adoption of FedNow over the past year.
How do you, and I'm going to take us off script just for a moment, how do you think of banks versus fintech companies? How do you think about users, userability, and ultimately the end consumer?
Yeah, so FedNow is not a consumer-facing brand. I think most of you, are kind of think about the central bank, the Federal Reserve. We provide service to financial institutions, banks, credit unions, et cetera. And then those financial institutions provide service to customers. So consumers are never going to see, a FedNow logo as they make a payment. They'll see something else. It'll be branded, by their financial institution, maybe instant pay or something like that. Every bank will make their own judgment.
So, what are some of the challenges you faced over the course? Again, the growth has been truly amazing, and I think almost unbelievable for a lot of companies. And again, and I will fully admit that I was skeptical, and not just in terms of getting it out of the gate. I think oftentimes when you push something out of the gate, you expect it then operationally to have challenges. I don't think you've seen any of those challenges, and I don't want to jinx it, but your numbers continue to go up in terms of various institutions and entities sort of accepting this. What are some of the challenges you've had this year to get to where we are, and what do you sort of foresee moving forward?
So I think one of the things that I hear an awful lot when I talk with financial institutions is just the sheer number of different priorities that they're juggling. And I think that's true in financial institutions. I think it's true in the central bank, and I suspect it's probably true in almost every one of your organizations, maybe even yours, of trying to juggle a lot of different priorities. And so in some cases, what I hear from banks is that they're interested, but they have a lot of other priorities that they're working through. So that's one thing. I think a second thing is just continuing to build awareness. I think we've done a really good job thus far building awareness among financial institutions, the fintech community, but I think in the general business community, there's a need for us to continue building awareness as well, understanding how instant payments could potentially benefit businesses and consumers nationwide.
So perfect. You keep talking about how it's transforming businesses, and we talked about it's not necessarily a consumer-facing tool. By the way, a lot of our members and our companies that are here today, not all consumer-facing tool, but we all know ultimately there is an end consumer that we have to think about. So how do you think about that?
Well, I think, if you think about just our day-to-day lives, everything, we're kind of used to everything being on call, if you want to think of it that way. So I'll ask you a question. So
It's really not how this works.
Yeah. Well, so I think my sense is you may be slightly impatient at times.
Ask Taylor.
So how long of a wait would you find frustrating if you were on your ride-hailing app and it popped up and they'd matched you with a driver and it gave you a wait? What number would you find frustrating?
Probably 11 minutes. Anything more than 10 minutes already is real time.
Okay, so
By
10
11 minutes, I'm like canceling and going to the other app.
And this is the thing that, as I think about instant payments, we're really not used to waiting really for anything anymore. You find 10 minutes frustrating, 11 minutes frustrating. Yet many of us still wait for money, and that's in this, we wait for money to move for a day or two or even longer. And that's for the people in this room. Several speakers have talked about folks at the lower end of the income distribution today in various different panel conversations. And for those people, getting access to money or being able to move money quickly could be the difference between being able to move money or incurring a late fee or needing to take out a payday loan.
And so let me ask you, what's the most creative use cases you've heard? Like how has it made a difference?
So, the last time we introduced a new payment rail like this was about 50 years ago when ACH was introduced. And none of us were around, at least I wasn't around at that point in time. And so when we launched this, we thought we knew what we would, could expect, but we weren't entirely sure. We'd always envisioned it as a platform for innovation. So today, ACH is being used in a lot of ways that nobody could have envisioned in the 70s. And we, I really think, my own personal view is that same thing will happen over time with instant payments. I think what's been a little surprising to me is how quickly that's happened. And so several, again, harking back to earlier presentations today, several panels have talked about earned wage access, which is a primary use case both on the FedNow network and the RTP network that the clearinghouse operates. And that wasn't something that we had really conceptualized, but we knew if we introduced this capability, the capability of moving money between financial institutions in seconds, 24/7, 365, that capability would drive innovation, and that's exactly what we're seeing. Personally, I'm really eager to see what the next several years holds, because there are a lot of creative entrepreneurs in this country, and they're going to think of creative ways to use that capability.
So what have you had to shift? What is something that you thought of at launch that sort of was an easy prediction that you've already had to sort of shift around? Like, meaning, what's gone well and smooth and clear as you predicted it, and what have you had to look at and sort of refine or make changes to?
So I think one of the things that we knew going into the launch was how important the provider community that serves financial institutions is. So the core providers and the technology firms that provide the primary core accounting systems for the vast majority of financial institutions in this country. I don't think what wasn't necessarily as much on my radar, I'll just speak personally, was the fintech community. And that was, when I eventually came to come visit you, thinking about how we could create more of a conversation between us and the fintech community, recognizing that fintechs cannot get service directly from the Federal Reserve, but as I said earlier, can be a real enabling force. And I think that's been something that's been eye-opening for me personally.
Okay, so this is like the obvious question, and most panels tend to end this way. I mean, I'm not going to ask you what the next 4 years looks like, because I don't care what for you in terms of the next 4 years, but what do the next 5 or 10 years look like, right? So I want to make sure, to be clear, it's not a political question, but payments is evolving rapidly, right?
Yeah.
When I would argue, and I wrote the op-ed back in 2020 thinking, FedNow is going to open and operationalize by 2023, and I kind of laughed, and I said, there's no way. You made me eat
It
those
was
words.
nice that you didn't pull any punches. Yeah.
You made me eat those words. So talk to me about what you predict. And I would say everybody get your pens out because so far you've been fairly good at keeping those promises and looking sort of towards the future. So what do you think 5 years in payments?
So this is, again, my own personal view, but I really believe that when payments are easy and seamless to make, we're going to see more of them being made. And again, earned wage access is a terrific example. Instead of one paycheck or two paychecks a month, a worker might get one a day. And so that number of payments continues to increase. So I think that the total number of payments made in the United States is going to continue to increase, potentially quite significantly, as instant payments take root and begin, we see their uptake in more and more facets of business and society. I think the other thing that I already mentioned, I think we're going to see creative uses that none of us could probably imagine today for instant payments. I think that's going to happen. But I think most importantly is I think instant payments are just going to be normal. Kind of like a 5-minute wait for a ride is you kind of consider normal, and a 15-minute wait is unusual. I think there's going to come a point 5-10 years into the future where we're going to look back and think it was a little unusual to wait 1 or 2 or 3 days for money to move. I think about this, and if you think about every new technology ever introduced into society, it started out as somewhat novel, and then over some period of time, it just kind of became normal. And as evidence of that, I asked my team how many people still have a landline in their house, and nobody still has a landline in their primary residence. But of course, 10 or 15 years ago, everybody did. In fact, 15 years ago, if you walked around telling everybody you didn't have a telephone in your house, they would have looked at you a little quizzically, probably. I don't even have a phone in my office anymore. And that's just normal now, whereas it would have been really unusual 10 or 15 years ago. I think moving money instantly is what is going to be normal 5, 10, 15 years from now. Even though it's a little bit novel still right now, it's novel but growing quickly, and eager to see the industry continue its embrace of the ability to move money instantly.
So thank you.